This is a full beginner's guide to learn ICT or SMC concepts in less than half an hour. I'll be going from all concepts you need to know, including liquidity, fair value gap, order blocks, premium discount, etc. And I'll be ending the video with an easy and effective trading strategy that will include all these concepts. If anyone needs a one-on-one mentorship, check out the description. This is Mulham, and let's get into the video. So first of all, and I put it at the first concept. Why? Because in my opinion, this is the most important concept when learning ICT or SMC. So what is liquidity? In order to deliver this in the easiest way, I have two points of view right here, two ways to look at the markets. The first one is the retail. And since you're coming into this video, mostly you're a beginner in the SMC or the ICT concepts, and you are looking at the market in this way, looking at resistance and support. So this low right here as a support level, and you're expecting this low to be respected, like price making an equal low or not extending below the low. So it should be respected, then going up. This is your way of taking a look at the market. The same way with resistance. So we have this high, price will only come here. Any reaction from this level, and it's a line. Any reaction from this level, I'd be going short. This is the way that you're looking at the chart now, and this is the way that I used to look at the chart. But after learning ICT over SMC, I have a very different way of looking at the market, and it is right here to the right. So we look at the chart in this way. You see, this is the same resistance level that you're looking at, and this is the same support level that you're looking at. What do I expect? First of all, let's discuss what is liquidity. What is above this high right here? So this is a high. There are some people who are going short and they're having their stop losses above. That's an order, which means that's a liquidity. That's a money above this high, right? Because stop losses are money. What is another type of liquidity that is above this high? There are some people who are trading breakouts, which means that whenever price goes above slightly, they're going to be buying. Why? Because they're trading breakouts, which means that price will be expanding and it will be going up in a momentum. That's another type of orders, which means that's also liquidity. What is another type of liquidity? Especially with people who are trading support and resistance also, they're waiting for price to give any reaction at this level to go short. So they go short. Now let's say someone where the price comes here, he goes short, price slightly goes lower, small rejection, and then went up. So he would be stopped out. Also, the people who are entering in a breakout order, they'll be going up here and then price will come lower. Also, the last people who are with the stop losses here, their stop loss would be hit. The market goes for those stop losses and those orders, takes them out and start going lower. So any support or resistance level, it would be dealt with in this way. Take out, taking all of the orders, then coming back into the range. It's not this way that the level would be respected in this way, where price create, I would say, equal highs. No, it would be a fake out, then price coming back into the range. Now it's the same way looking at the opposite side. So we have this resistance level. It would not be like, oh, price coming back into this level, the exact level, and it's going to reverse. No, mostly as price wants to take some liquidity and there is liquidity below this low, price will fake out, take people's stop losses, takes the breakout traders out, and also take the support and resistance reversal trade from here. So three people, three types of orders, they're all taken, then price goes into that direction. Exactly the same way. So after I switched from here to here, I improved my trading, I would say 30 to 40 to 50%, even 50%. I now see the market in a very different way. Today's video is sponsored by Hanko Trade, one of the best brokers in the business with spread as low as 0, low commission, and you can trade all markets, including Forex, indices, and crypto. And if you use the link in the description, you will get an exclusive 100% bonus. Make sure not to miss it. Let's get back to the video. Now, we talked about liquidity, but where can we see liquidity? Where does it, locate at? Actually, highs and lows, we discussed this because this is a low. There is liquidity below. There are some orders below, stop losses, breakout traders enter here, as well as people with support and resistance also trading. With highs is the same. Now we have a good amount of liquidity above highs and below lows. But what is more liquidity? Where can we see more liquidity? in equal highs and lows. So, in a single high, there is a good liquidity. What if it is, equal highs, which means that, oh, it's a double top or double bottom or triple top and triple bottom. There is more liquidity in there. You see, we have high and a high, liquidity, and also more liquidity here. A low, we have liquidity and more liquidity here because price did not take the low. They're equal, which means the stop losses at this level right here were not taken, which means that we have more liquidity now. So when price takes those level of liquidity, the reaction would be stronger. The probability of the trade would be better. When we have equal highs and lows, it's a higher probability than just a single high and low. Now, the same thing here, trend line is also a type of liquidity. What do we see here? We have a liquidity, we have stop losses here, creating another high right here. Does that mean the stop losses from here are taken? Not yet. So people who are having stop losses here, they either keep it here or moved it here, right? Which means that we have more liquidity. And there are some new people entering here, so we have more liquidity. Also more liquidity here. First started going up. So we have a lot of liquidity here in this trend line. What happened is this, price comes lower, takes some of this liquidity, maybe one or two highs or two lows, depends on how much price wants to retrace, and then goes up. The same thing here in this descending trend line. We have a high, people are going short, more shorts, which mean more stop losses, another short, and there are also a lot of orders about the trend line for the breakout traders. So when this trend line is broken, it takes the stop losses. It also takes the orders of the people who are going long, and it goes down again, which means it's taking the orders of the breakout traders and they're losing. So that's 2 in 1. Other types of liquidity, but they are more advanced, especially the last one. So we have previous month, week, day highs and lows. So the previous daily high and low is a very good liquidity level. Also the weekly highs and lows, also the monthly highs and lows. Another one is the previous session's highs and lows, and you can create strategies only based on this, on the previous session's highs and lows. So we have the Asian session, the London session, and New York session, and we'll be talking about this in details. The last one, and this is more advanced, I'm not going to go over this today, but I have specific videos about this where I go in details. So I'm not going to be talking about inducement here, but in my opinion, it's the best liquidity level to keep an eye at. And this is my area of expertise. I like inducement, I trade inducement, and I feel it's the best thing to trade. Now, how do we know after the sweep of liquidity? How do we know that price is now reversing or price is just continuing to the upside and it's a breakout entry? There should be something that confirms that there is a change in the direction now and price is reversing on the other side. What is a confirmation that we can look for to confirm this? Here comes change of character, also known as market structure shift. So market structure shift, MSS. Change of character can happen in the most basic way. We have a sweep of liquidity. So we have this old high, price comes there, pick out above, comes lower. So here is the manipulation. Price is now going lower. How do I confirm that price is now going lower? What is a confirmation? It's a change of character. What is it? It's the last low. So we can see that price was going up. There is a low, there is a higher low, and there is a higher low. This low right here, when broken, we can see that it was creating higher lows. Now it's creating lower low, which is right here. Breaking and mostly closing below this low with a candle. That means there is a change of character now, or there is a market structure shift. And now we can confirm that price is going to go lower. So after the change of character, there would be a retracement to the upside and then continuing lower. We can see that we moved from creating higher lows to lower lows right here after the change of character. Now, as a note, it can get more complicated than this, and I have a full video about market structure shift or change of character. There are a lot of different types of change of character. This is the most basic way, and it's still effective. Now, we already talked about market structure shift. On the other hand, breakout structure is a continuation. We discussed about change of character when price is going up, and there is a clear trend to the upside. When price is reversing, we see a change of character. On the other hand, Breakout structure is a continuation. So let's say that we have this high and price simply goes up, break above this old high, and there is a displacement above. So price did not fake out and then started going lower. No, there was a displacement. There was a momentum above the high. That means that this was a breakout, a real one, which means that this was a breakout structure. Now, after a breakout structure, this means that we are going up, created this high, started going lower. Where does price comes? You see this range from this low to this high. Price comes back. There is a small retracement coming into, an order block fair value gap, and we're going to discuss this later. But a price comes here to buy and then go up again. And we can see that this was the high that was created. It was again broken with a displacement or momentum, then start coming lower. What do we expect later? Price to go up, go above this high right here, and then this is now considered a breakout structure. So breakout structure is, in a bullish scenario, taking highs or breaking highs with momentum. If it's a bearish scenario, then breaking lows with momentum. So it depends on the trend. Breaking old highs or lows is a breakout structure. Fair value gap, also known as an imbalance, it's a 3 candles pattern. And in my opinion, fair value gap comes immediately after liquidity. So after knowing liquidity, I would say fair value gap is the second most important concept in ICT or SMC. So fair value gap is a 3 candle pattern. Let's consider this right here. First candle, second candle, third candle. When this high or the high of the first candle does not overlap with the low of the third candle in a bullish scenario, this is a bullish fair value gap. This is a bullish fair value gap. The zone from here to here. In a bearish scenario, we have, this is our first candle, second, third. The low of the first candle does not overlap with the high of the third candle. This zone from this week to this week is a bearish fair value gap or a bearish imbalance. This fair value gap can be used as an entry, and it is mostly filled, and it gives you a fair value to buy or sell. So let's say in a bullish scenario, price just expand to the upside like this and it create a fair value gap here. Even if it continues to the upside, price will eventually go lower into the fair value gap, and you can actually buy from here because this is a good value or good price to buy from. So price will come here, then you can buy here and price will go up. Not always, but mostly a retracement after a fair value gap to come to the fair value gap to buy, or in this scenario to sell because price is coming lower now. Eventually price will come to the fair value gap. If it's a valid one, then you can sell from here, from the fair value gap, and it gives you a good price to sell, or in this scenario to buy. And actually fair value gap can be used for different reasons. And I have a video about uses of fair value gaps that no one knows about, and they're very advanced. But make sure to master the fair value gap. You can go on a chart, see how this gap from this high to this low, how is it respected, and just see how, whenever you have the fair value gap, what does price do? This is going to help you to understand fair value gaps or imbalances. Now we discuss about fair value gaps. We also have order blocks, and it's another way to enter a trade. So we know that fair value gaps can be used to enter a trade. Order blocks are also the same. So some people say change in the state of delivery. Some people say it's an area where there are a lot of orders to be executed. In my opinion, and just to make it simple, because this is a beginner's guide, I would say order block is an area where you can buy or sell to get a good entry. And order blocks give you even a better price than fair value gap. So if you're buying, order block are going to give you mostly a lower price, a cheaper price to buy. And this is the same as fair value gap. It will be mostly filled, and it's also going to give you a fair value to buy or sell. Now, let's see here the most basic definition of an order block. And as I said again, I have a full guide on order blocks where there are a lot of conditions to look for a high probability order block. But the basic form is, you can see that price is going lower. Mostly there would be a sweep here. So a sweep of liquidity, because that's another confirmation. Price went up. Where is the last bearish candle before the bullish move? So we have the bullish move here. Where's the last bearish candle? It's right here. This could be a bullish order block. On the other hand, price was going up. This is the bullish move. then the bearish move start here. Where is the last bullish candle before the bearish move? It's this one. So this could be an order block. And we can see that we have the order block. What do we have after? From this low to this high, there is a fair value gap. So price can actually come to the fair value gap and go lower, or it can come to the order block and come lower. So it depends on how much price want to retraces. And you're going to learn this over time, and by experience, you can pick one of those entry types. So it's either order block or fair value gap. There are also other different types of entries, such as breaker block, mitigation block, inverse fair value gap. So you can also look for those, but I'm not going to cover them today because they're a little bit more advanced. Premium and discount. In any dealing range or in any range, see from this low to this high, we had this wave, or we had this range from this low to this high. If we take our fib and we have the settings at 0, 50, and 100%. If we apply the fib from here to here, you can see that this is the 50% level, this is the 100%, and this is the 0. Usually everything below the 50% is called discount. Everything is above 50% on this range is called premium. What does discount mean? It means that the price is cheap. What do we do when the price is cheap? If you go to any store and there is a discount on a product, what do you do? Or there is a product that is so cheap, what do you do usually? You buy the product. Why? Because the price is in a discount, so you buy. The same thing for premium. What does premium means? Means that this thing is expensive. So we only sell from here. So anything above equilibrium, we sell. Anything below, we buy. This gives you a filter. So on any dealing range, you don't want to buy here on premium. When something is expensive, you don't buy. And when something is cheap, you don't sell. You do the opposite. So this is a filter on any range to get a high probability trade and to have another confluence. This is what you do. You apply the fib, anything on premium, you sell here, you buy here only when you have the right setup. So if you have a setup here and it's a sell, you don't take it. But if you have a setup here and it's a valid one, it's also in discount and you're buying, then that's a high probability trade. So we don't randomly sell from premium and buy in discount. No, we wait for a trading opportunity on discount, and it should be a buying opportunity, then I would enter. The same thing goes here. If I see a short opportunity on premium, I would take. The opposite, I'm not gonna take. Optimal trading entry, also known as OTE. So if we apply the same fib, but we change the settings, and this is now the 50%, this is the 100%, this is the 0%, we have new levels right here, and it's 79, 70.5, and 61.8. Those levels are called the OTE. So the OTE zone, or the optimal trading entry, is this zone right here, from the 62 or the 61.8 all the way to the 79. What does that mean? That means in this dealing range, if price comes down here to this OTE and I want to long, it's a valid long entry or long trade, what I'll do is I'll wait for price to go into the OTE, and this is the best zone to look for long positions. It can also be applied for long or short positions, but OTE are those specific fib levels that if price reach, then that's a very good price to enter from, and especially if we have a setup there. So I'm having this range, price comes to the OTE, I see a good reaction from there, I can enter, or I can wait for a setup here as buying, and then I can buy here. So this is always a good price to enter from. This could be using as a confluence. And as you can see, we have the 50% here. So looking at the OTE, it's always part of the discount zone. It's always below the 50%. If you're shorting, then it's always going to be part of the premium zone. I also have a very specific strategy on optimal trading entry. You can also look for that one. ICT Kill Zones. There are some time periods of high volume and high volatility, and ICT himself recommends trading at those periods. And they're usually 1 hour before the real market starts. So the London session, for example, start at 3 a.m. But the ICT Kill Zone for the London session is 2 a.m. It's 1 hour prior to the start of the market. Why? Because there's always some volume. A lot of people waiting for the opening of the market. There are some people who put trades at that time. So this period of time is a high in volume. Also the same for New York and the Asian. Usually we're going to be focusing on London and New York. Asian is going to be a little bit different. We're going to use it as a range. We're not going to be trading the Asian because it's mostly a consolidation or ranging market. Now the Asian is at 20, which is 8 p.m. to midnight. London kill zone is 2 to 5 a.m. New York kill zone is 7 to 10. All those times are New York time zone, which is EST. In order to have high probability trades, try to minimize the number of trades and only focus on London and New York kill zones. You only take the trades inside of those two sessions. Now, combining everything that we learned today from the previous slides, we come to the 2022 mentorship model. It's an easy and powerful strategy combining all of the concepts that I just mentioned. So all of the concepts that I showed you, they are in an order where you can combine everything and you get this. So what does the 2022 mentorship model consist of? First of all, we need to see a liquidity sweep, clear one, right? So we can see the fake out price immediately comes back into the range. This is the first thing, the liquidity sweep, and we discuss about this. Then we have a displacement and we have momentum to the downside, creating a change of character. It's taking the last low in the range before the liquidity sweep. So liquidity sweep, change of character. Now you can actually look at the leg that caused the change of character. See if there is a fair value gap here. Now you could use the order block too, but my preference for you is using the fair value gap now because it's easier to spot. Sometimes the order block would not be valid. So look for fair value gaps. We can see that, oh, there might be a fair value gap here, right? I would be marking the fair value gap. I would be setting my sell limit at the 50% of the fair value gap or at the beginning of the fair value gap. I would say if it's too big, then I would have it at the 50%. If it's kind of a small one, I would have it at the beginning of the fair value gap. And then we can target any other liquidity level. Now you see this range right here from this high to this low. We can apply the premium and discount from this high to this low. And we can see that this is definitely above 50%. The fair value gap is above the 50%. So it's a good place to enter. Also, if you apply the same fib for the OTE, maybe this is part of the OTE, the optimal trading entry. So maybe 62 or 79 is somewhere in here. So that's give me another confluence, another something to be confident of. Price will react from here, right? Because I have a fair value gap, I have a change of character, I have OTE right here. So the more confluences you have, the higher probability the trade would be. So this is the 2022 mentorship model. Try to practice it. Try to take it at the good times, which are the London and New York kill zone. And you can look for this in specific times. For example, this could actually be the Asian range high. And when price takes this inside of the London kill zone and start going lower, you might take this as now there is another confluence, which is time. And there is also another confluence, which is a high of an Asian session or, a session high. In this case, it's the Asian one. So this is another confluence. So there are a lot of ways to have a twist on this. There are always a lot of ways to play with this. Just make sure that you practice the basic form of this model first, and then maybe play with it. But make sure to master the basic one first. Because if you don't understand the basics one, then you're going to be having a lot of issues in the future if you don't understand the main one. Now going over examples of the 2022 mentorship model, which is combining everything together. So this is the first example right here, and I'm not going to cover a lot of examples. I want you to do most of the work when it comes to practicing this, because all of what we have done today, without practicing, without putting the time, without going into the random charts, see what we discussed, look at fair value gaps, what was happening. This way you would understand the ICT or smart money concepts. Otherwise, it's not going to be helpful to you. So what do we have on this chart? You can see that price was going lower. And what time is this? Almost 2 a.m., which is actually the start of the London kill zone. And this is on EST times, which is New York time. So what do we see here? We have the liquidity sweep. There was a low, that price take, and immediately come back. See, only one candle that closed below, the other candle went back into the range immediately. Where is the last high before the sweep? So the sweep here, we go to the left and we can see that this was the last high before the sweep. So this could be my change of character point which means that if price closes above this high, it's a confirmation that price is now reversing to the upside. And we can see that this candle doesn't close above, but this one does. So after price taking this high, price continue to the upside again, and then a candle to the downside. When I see this candle to the downside, I would know that, oh, there is a potential of price retracing now. Do I see any fair value gap here? Or you can also apply the OTE from here to here, or also the premium and discount. And we can see that we have a fair value gap. This one right here, it's actually from here to here. This is my fair value gap. And I can see that this is on discount. So if I take it from here to here, this would be on discount. And we have this fair value gap. We have another one. But now as a beginner, you always look at the extreme fair value gap. So you look at the first one, and you can see that after price retracing down, it comes to the fair value gap. You get your entry, stop loss below the low that caused the sweep. And then price started going up, and you can target this high, or you can target any previous high. You could target the previous day high. You could target the previous session high. All of those different levels of liquidity that we discussed. And I have a lot of videos about liquidity. You can also watch them to get more experience. But this is the most basic form of the 2022 mentorship model. Sweep right here, change of character, second step. Third one is a fair value gap on discount, usually the very extreme one, which is this one in this situation, from this high to this low. This is the fair value gap, and we can see that price was respecting the fair value gap. Price did not close below, and then started going up. That's a very nice entry. And even right here, this fair value gap was also respected here. Price started going up. This fair value gap right here was respected here. Price going up. The fair value gap are very strong, especially after a liquidity sweep. Another example here of the 2022 mentorship model is this one right here. So this is on NASDAQ. You can apply this on any time frame. So the previous one was, I guess, on the 5 minutes. This is in the 4 hour. You can apply this on the daily because time is fractal. You can apply this on any time frame. Whenever you see a liquidity sweep, which is right here. So we have the liquidity sweep, first candle below, second candle, third, fourth, fifth. And you can see the price was starting to go up. So about 5 candles below the level of liquidity, but then a very huge displacement or momentum back into the range. And where is the last high before the sweep happened? So this was the last high because the sweep happened here. This was the last high before the sweep happened. This is my change of character level. Now we have this big fair value gap. We have this small fair value gap. There's another one here. You could have taken both. We have this extreme one, but usually I would take the big one. So this is a very big one. I would mark this fair value gap because this is too big. Sometimes price will come back to it and then go up. It's not going to go to the extreme one because it's too small. But in this case, it goes there. Actually, you see, we're going to get even a better trade if we take the extreme one. But my preference would be the big fair value gap, this one right here, and this one on the 50%. If we take our range from here to here, this would be on the 50%. We can put the trade or the entry at the 50% of the fair value gap, as we discussed. If it's too big, then I'll take the 50%. If it's not big, I'll take the beginning of the fair value gap. On this case, 50%. Where do we have the stop loss at? At the low of the sweep. And then what do we target? Any liquidity level. This one, or this one. I targeted this one, you see. And we can see that price actually comes back to the entry a little bit lower, then it shoots up and it goes to the take profit. So this is another 2022 mentorship model on the 4 hour. As I said, you could do this in the 4 hour, 5 minutes, 1 minute, 30 seconds. Now, I hope you guys like the video. I tried to make it as simple as I can in order that, we go from the liquidity to the fair value gap to the order block to the optimal trading entry to the ICT Kill Zones, etc. Then we go to the 2022 mentorship model to ensure that you understand everything before going into that strategy. So I hope this way you have better understanding when it comes to ICT concepts or smart money concept. And remember that this is only a beginner's guide. So I did not talk about a lot of the advanced stuff that I talked about in my other videos. So if you really want to take it into the other level, make sure to watch all my other videos because I go over different concepts about the smart money concept or ICT in a very simple way and very advanced way. So make sure to watch my other videos. If you guys like this type of content, make sure to like, subscribe, and leave a comment with whatever you want me to cover on the next videos. This was Mulham, and I'll see you next video.